Hey guys, we are back with Stocktwits Community Rip Live. It's Bags, Ben, Nick, Jeff, Di. We got GP over there in the studio with our special guest today, Don Corleone 77, and we'll call him Chris while we're here. But hey guys, how are we today?
Doing great, man. Enjoying New
Awesome.
York City right now, so
Bullish.
can't argue with being here.
Dude, it's 80 degrees here in New York.
It's
It's a
beautiful.
steam fest, but it's still awesome. But we're live actually in the studio today, so change of pace, and it's kind of cool. There's some questionable pictures up here, but other than that, we're good. How you guys doing?
Live
Hey,
from the Cashtag
don't
Awards.
scan the walls.
Don't pan out.
Good.
Guys, we got some information today. Obviously, the market's having a negative reaction to slower quarterly growth. We're still below that 472 level that we talked about last week. We're above 470 though. Hey, Chris, we haven't talked to you before. So, what's your perspective on how the market's playing out the first 100 days of the administration's term? Does any of that matter? Does none of that matter? Are you a fundamentalist guy? Just let us get to know you a little bit.
Yeah, well, I blend a lot of things, both fundamentals, technicals. As people who follow me would know, I stay current on news that comes out that might impact the market in the short term. Um, my perspective is, I think in the long term, I think markets tend to be reasonably rational in the long term. Sometimes in the short term, they can be rather irrational and react sometimes in extreme ways. So we have to be, as an investor, I think you need to be aware of all of these factors. Um, so my particular stance at the moment, I think, we're not in a necessarily a raging bull market right now, so we need to be nimble. You know, uh, whereas maybe some people, it depends on your trading style, of course. People I get asked a lot, what stocks are you in right now? And you know, I'm reluctant to ever give a recommendation on an individual stock because I don't really know what the other person. I don't know what their trading style might be, right? I've talked to people about this, and I'll tell them, I could go into a trade, um, and you can go into a trade at the same time. I could end up making money, and you could lose money, and vice versa, depending on how you approach the market, depending on your risk tolerance. It might be different than mine. But I think now, whereas normally I'd be more, I guess, more prone to hold in a positive environment where I think the line of least resistance for the market in general would be higher. I think right now it's time to be nimble and take profits when you can. Um, be careful. There's just a lot of uncertainty in market. And so we said markets don't like uncertainty, right? So we got to be aware of the conditions that are out there. And I guess my idea is I I don't know everything. I wish I did. I don't. So I have to listen to what the market tells me, and I adjust based on what I'm hearing the market tell me. So if it's telling me in general the line of least resistance might be lower or higher, I'll adjust my trading strategy to that particular condition. I don't try to tell the market what to do. I've tried to do that in the past. It didn't work out too well. Um, so that's kind of where I do it. And you know, I just see the market as I deal in probabilities. I deal in, what are the likelihoods of things happening? I look for patterns. I look for indicators. But there's no guarantees that anything is going to necessarily transpire. So all I'm really looking to do is consistently over time put the odds in my favor, right? So, everybody has their own way of developing an edge. We all look for an edge. My edges might be different than someone else, the way they see their edge, but gaining an edge is part of it. But the other part is we also have to manage our trades as well. And I think that's something as retail investors, we learn over time. We can't necessarily just fall in love with a stock, buy it, and just hold it. I sometimes on these public forums, you're having discussions, and it's almost like you're at a sports game where there's somebody owns a stock, it's their team, and if somebody says something contrary to or that may not be perceived as positive, they want to fight you about it, right? Uh, I don't, if we're here to make money, we have to be rational, right? And part of it is, I think, that one of the most important things psychologically is the recognition that we're not always going to be right, and we got to detach from our ego, right? If we think we always have to be right, you're going to have a very hard time in the markets, right? But if you're willing to listen and you're willing to learn, you're willing to do the work, and that's the beauty, I think, of these communities. Meeting people like you, for me, I'll learn from anybody, and so you'll have experiences, um, things that you've gone through, things that you've learned that I may not have, and I can pick that up from you, right? And I think that's the value of participating in a community together. We can learn, grow, and learning about various indicators. For example, you know, uh, VWAPs, right, is become more and more popular. And I've read Brian's book, by the way, Brian Shannon book. I think it's fantastic. But that's a way of trying to gain an edge, right? But there are conditions where that works, and it doesn't always work. Not
Right.
saying it won't work a majority of the time. It could, but it's not always going to work. So you have to be willing to be flexible and not.
Yeah, and I couldn't agree more with you more, Chris. I mean, the three of us met each other on Stocktwits. We all have very different ways of approaching the market, approaching our trading strategies. And I've learned so much from these two guys over the past 2 years. And I think you're exactly right. We talk about this a lot. And GP, maybe you can jump in here. Time frame, right? My time frame could be different than your time frame. What I'm trying to do in my investment or my trades is completely different from someone else. And I think by having a community like we have here at StockTwits, you can learn some of that from other people, right? It's not something that you necessarily have to pay the high cost of education sometimes in losing a bunch of trades. And I frankly love that about the community too. But GP, I know time frames are a big thing for you, and you always work for your way from the largest down. What are you thinking about right now, just during, you know, the market's bounced back a little bit from the open, but we're roughly about where we were at last year or last week. We were flat.
Yeah. So I, what Chris was saying, I think it's really important for you to understand that you can be a trader and you can be an investor at the same time. You don't have to be one or the other. And if you want to be in stocks, story stocks, the sports team stocks you're talking about, it's okay to hold a portfolio where you hold those, whether they go down to 10%, 20%. I quite often hear people say don't fight the market. The market always knows, and you're wrong, and they're right. The market misprices things time and time again and again. So that you might be right in that 5 minute scenario or that 1 day scenario. Oh, sorry. But over time, the reason you can get into these stocks is because you have opportunities where the market is mispricing the risk, so to speak, right? So when you talk about time frames, you talk about the largest time frame is for me quarterly. I start from the quarterly. Well, I start from the yearly, but that one I don't look at every year, every day. But um, and when you start to see things that are aligned on multiple time frames, you're in the point of where you have confluence, where most people who are watching the markets, whether you're fundamental, whether you're technical, are going to look for this point in this, you can say in the chart or in the markets in general, where you can find multiple levels of confluence, right? So, how do people know where to buy? A lot of people buy on fundamentals. Things get cheap, but you can also know that things are on value traps, right? Like Nike, Starbucks been value traps for multiple years now. They're targets of value trap. Um, Nvidia's been the biggest value trap over the last 12 months, right? Everyone's like, oh, it's cheaper, it keeps getting cheaper, yet the price doesn't go anywhere, right? Because it's growing into valuation. But you gotta have multiple time frame alignment, in my personal opinion, for things to actually start to work. In your opinion, so this stuff that's going on right now is working on repairing the shorter time frames. I think I've been posting for a couple weeks now. The shorter time frames I watch are the 30, the 60, the 2 hour, and the 4 hour. And so when the 30 and 60 are bullish, but the 2 and the 4, you're probably going to have a pullback. But if the 30, 60, and 2 are bullish, you're probably going to still have a pullback because the 4 is not bullish yet. So when you start to get those intraday timeframes to align and they're all getting whatever indicator you use, it doesn't really matter what it is. I use MACD and RSI. But if you're starting to see higher lows higher lows and higher highs and bull crosses on all these different time frames, it'll most likely line up on the daily. And then you'll see the narrative change and the news will drop. Trump's got a China deal or whatever it is, right? So all this
He
stuff,
doesn't have a China deal, GP.
I get that, but we are news. We know for sure has been driving us, but less and less over the last couple of weeks. Right, we're not getting the same reaction from the markets that we were getting end of March, going into early April. So things are getting absorbed a lot better than they used to. Can you get a second leg down? Absolutely, but you need that secondary catalyst. Every big 60-70% move in the market hasn't happened in one news cycle. It's multiple news
Yeah,
cycles.
markets don't go straight up or straight down, right? Yeah.
So
But I think that's you touched on a really important point. Again, it goes back to investment strategy, right? So if you're, I try to read as much as I can from people who are much more successful than I am, and that's one of the things Jesse Livermore would say, right? He would never give stock tips either, and he said, what he would tell people was, I believe the line of least resistance in the market is either higher or it's lower. So again, now if you're talking about 2 minute, 30-minute, 15-minute indicators, it depends again on what your objective is as you're going in, right? So if you're looking for short-term trades, if you're looking, depending on your time frame, your horizon, those indicators are going to be useful to you. If you're more of an investor and you're saying, hey, I'm looking for companies long term that I think will have technologies or something along in the future that are going to keep growing, maybe you're going to be more predisposed to something along the lines of what William O'Neill would talk about with the can slim method, right? Where you're looking for those particular variables and you believe the company over time is going to continue to grow and continue to be successful. Is it going to go straight up? No, but that's where your conviction will lie. But as I've, for me, the more that I've been doing this, and again, I'm not, I watch the market every day. Not everybody I don't know the audience who's watching, some people may, this might be something they do where they're just investing while they have a regular job and they work a lot and they invest on the side. And so it really depends on your objective. But if you're watching the market all the time, um, for me, there's a lot of things that can be happening. And this news cycle is one where it is impacting the market more than maybe other news cycles. Um, we call them, I'm on a couple of Discord groups and we call them Trumpedos, right? Where,
fair enough.
I mean, you could set up the indicators we're all looking for can set up. All right, I can look at a company, fundamentals can be strong. I could be looking at moving averages; they could all be aligning. I could see the cup with a handle pattern that seems to be perfect, and and the setup could be there, and then all of a sudden, you know, our president can make a tweet and everything can change, right? I mean, I'm an older guy, so I know a lot of people different ages. I'm an older guy, so when the president would talk when I was young, you'd have 2 weeks notice, and it would be, and you would know what the president was going to talk about when he spoke. Now this guy's got a device in his hand; he could tweet out at any moment, right?
anything at any given moment.
at anything at any given moment. So, that's where I think we do have to recognize the conditions. So, and if the overall market isn't cooperating, this is something I didn't know and I had to learn. Like I thought I could find good companies, and it didn't matter if they were going to go up. Eventually, they're going to go up consistently, even if the market wasn't going up. And that was wrong. I was wrong there, early on, and I was wrong. If the market is the line of least resistance is lower, and the market is under pressure, good luck being long. I don't care what stock you're in. You know, and if the sector you're in is under pressure, good luck, right? So I kind of started to look a little bit more at the macro, the macro conditions, look within sectors as well. Um, and if you're not in the right sector, and it doesn't matter if the company's good or not. And you know, I I read one of the things I've been trying to do more on Stocktwits is uh, I've been blessed with access to sell side analyst reports. So I've been trying to share those more and more with retail investors so they can get an idea of what, I don't know if they are familiar with these reports or how the sell side analysts communicate to their clients. But, what you'll often find is it, if a sector's under pressure, all the stocks are going to be downgraded,
Yep.
right? It doesn't matter good or bad. They're all going to be kind of taken down. And that's a learning, right? That's a learning. If the overall market is seeing that condition existing, it's going to be hard for stocks to perform well under those conditions, right?
Chris, I like you. I'm not going to joke around. We see the world very similarly.
And again, all
Do
we're
you
trying to
think-
do is look for patterns, look for indications, and put the odds in our favor. And I tell people, I don't gamble when it comes to investments. I do, I'll gamble for pleasure, to have a little fun. I might go, if I go to a casino, I'll bring money I know I don't need to have, and I use it as entertainment.
Right.
And if it's a couple $100, I'll go to the casino, and if I lose it, I walk home and I don't care. Yeah, I had a good time. Right.
Well, we've been doing this for over 2 years now, Chris, and that's one thing that we've always tried to share with everyone who's watched. Right, is no matter how good the fundamentals are or good the technicals are, all this is just gamed at probability, right? And nothing's going to be 100% ever, and all you can do is try to game it out in your best favor, whether that's trading and buying what you know, or trading and buying what you see as a pattern or indicators. Hey, Nick, I know you were probably more active in trading over the past week or two, in and out of some names. We've hit a level that we talked about. How are you seeing this market today and what we've seen over the last week since we last did the show?
I kind of looked at this morning as a kind of a stress test. I don't want to see us sell off into the close. I want to see us kind of continue to show that underlying strength.
I'm
Before
going to pull
I
up the cues.
thought I was going to ask, do you think that with how fast information is moving along with, like, say, the torpedoes, do you think it's more important to take a more zoomed out approach then, as opposed to historically, or?
Sorry, I didn't hear. Did you hear that question?
Yeah. So, because we're news driven, is it better to take a zoomed out approach versus focus on the daily stuff? And I think for me, we've been talking about this for a couple of weeks now. From February 19th, Wednesday before February OPEX. This happened in 2022, happened in 2020. It seems to be that Wednesday before Feb OPEX. It's also when Volmageddon happened in 2018. It seems, but right, it seems like the market structures are always designed to kind of show weakness around there. It's this odd thing that's happened since 2018.
See, that's exactly what we're talking about. I would not have known that, and to be able to hear that from GP. That's a pattern that I would not have known existed, to be honest with you. So this is the beauty of, I think, what we do. So
Yeah.
go ahead. Yeah.
So you can see that when that structure starts to break, and it seems around Wednesday, that Wednesday before Feb OpEx, it usually has been into March OpEx. It's about a month and change, and then it starts to correct itself. So I think we're in that similar pattern here. And what we're been talking about is all the technicals are holding. It's getting to the point of a high pivot or a low pivot, and either buyers are showing up or sellers are showing up on either scenario, right? So today, you can see it on the chart there, Ben, right? What is that? The 9-day?
Yep.
Yeah. You have a 9-day touch and kind of go, right? We're showing a green pattern here. There's a decent amount of accumulation, and we're staying above the mother bar, right? That 12% move on that single day, we absorbed it for 11 straight days, inside days, and then we're coming back and retesting it here at a pivot resistance, and we're holding, we're not breaking down. So to me, when technicals start working, means people are actually putting money into the market. When technicals stop working around like that end of February, early March timeframe, where no supports were holding, no resistance was holding, everything was the trumpedos, as you were saying, and it just kept breaking. There was not like no buyers were showing up. There was like no bid in the market, and that's not the change here. So that's a huge change in behavior for me. That yes, longer time frames matter, Nick, but I think price action technically has been telling us that people are showing up, right, in general. And if people are showing up, you got to see them not show up again for you to change your or shift your focus back to shorting the markets.
So if I asked you the question this way, if I asked you in your opinion right now, if I'm hearing it correctly, are you saying in another sense that the line of least resistance at this point may be higher?
Yes.
Yeah.
It's a wall of worry that we're climbing, and we're climbing it gradually
Mhm.
through time, which is great. We're not just going straight back up.
Yep.
The faster would have gone back up, the less likely I think it's a
The ability to hold.
yeah, it's building a base here. People are coming in, they're supporting the markets overall. So that's what I like to see. Ben, how about you? What do you see
Well,
here?
every time I hear you get bulled up in this intermediate time frame, my devil horns creep up, and I got my little pitchfork. GP, I still think we got to wait and see. I think the 470 area that we've talked about is a great place to hold. Granted, I've got the hourly on the Qs up. I mean, we dropped 2% and we're up 2% right now, basically. So
I think you wanted
it's got to hold.
Yeah, I think you wanted to see this kind of action happen. And I think best case scenario is to see MAG across the board perform like spot is. You see it get hit and then it gets bought up right away.
Look at Netflix, same thing, right? Like you have
Yeah.
the leaders of these markets telling you the direction. Apple's green already. So if you go down to the intraday time frames, go to the tech futures, Ben, if you can see that the 4-hour time frame, one of the ones that I watch more for more solid kind of trend action, is it it's working on curling back up to the bull side, right? So the 50 is about to cross over the 200, and typically when we have that and a big move into that cross, you generally see weakness coming back in to test that 50 or 200, depending on the momentum of the markets, that you'll get that test. And I think it's hammering on that on the 50. So those are all good, decent.
I'm sorry, GP. The NQs or which?
They're all good, decent signs in terms of my way of thinking about where the markets are going, right? Whether it's today, tomorrow, next week. And it's a digestion week. If you look at the week overall, we're in the top part of last week's range, and there's not a lot of volume. There's not a lot of sell side. Yes, that can change if a Trump tweet comes out and he says China's going to war with us in trade. There you have your secondary catalyst. I understand that can happen, but right now, all the intraday timeframes are starting to position themselves for a larger timeframe breakout. That's me.
And I think that's a really good point. And I guess it goes back to, again, what you're trading objective is.
Yep.
Right. Like if you're a long-term trader and you want to hold stocks long-term, you're going to have to recognize that if that's the trend where you believe it's going, there'll be volatility along the way, right? And you're going to be willing to absorb that, and you're going to have a longer term horizon, and you're going to be patient. If you're someone who's an active trader that's trying to trade the markets, um, you know, which I tend to do more, uh, I'm kind of, and I agree. I think there is a possible line of least resistance higher, but I'm also in this camp where if I get those gains, I'm kind of booking them right now
That's fair.
because I just don't know where to, the uncertainties that we're talking about. And you mentioned China. Uh, this is just a side note. My wife is Chinese. My wife was born and raised in China. I've been to China. I have a little bit more understanding of China, I think, than the average American does. So I don't know, like the uncertainty with what's happening. Um, Nobody knows, right? We don't know. That's the point. The point is we don't know. If we did know, we'd all be we'd all own our own island, and we'd be inviting you on our yachts, right?
We wouldn't be here right now. We'd be doing this on the beach somewhere. That's for sure.
We'd definitely be on a beach, right?
It would be a private conversation. Chris, I completely agree. I tried to warn everyone who would hear, basically a week after the election that I think we're in a sell the rip environment. And yeah, we went on up for 2.5 months after the election was over. I got down to around 60% cash in my portfolio, selling the rip. And these two guys were saying it's going higher, it's going higher. And I'm not picking on my guys. I'm not picking on my guys. They weren't the only people that thought it was going higher. And then all of a sudden the bottom falls out, right? And I look at my P&L so far for this year, and it's like, oh my gosh, I'm so glad that I sold so much when everybody was calling me foolish. And you have to be able to realize those gains. And this is something we talked about in a previous episode, but it's hard to sell, right? Unless you have that target in your mind, it is difficult to sell.
And this is the psychology, right? Who wants to sell when your stocks are going up? I mean, that's the dream, right? The dream is I have the next Amazon, or I have the next whatever, and this stock is going to fund my retirement, right? Why would I want to sell it? But that's really the point, and dude, you mentioned them being optimistic a few months, after the inauguration. I live in South Florida. I live actually 8 miles from Trump's Mar-a-Lago residence. So you want to talk about optimism? Um, People down there pretty optimistic, but by the way, I don't mean that in the sense that I have anywhere near Trump's wealth. I joke with people because he lives on a road they call Billionaires Row. It's A1A. I tell people I live on Thousandaires Row. So there's like this proverbial, used to be train tracks. We have an intercoastal. So it's a proverbial intercoastal. But no, it is hard. Everybody, a lot of people were optimistic after the election. A lot of people thought this guy was turning this thing around. He had, this mandate. Everything was gonna be great. But and that's where I was mentioning earlier, you have to be willing to listen to the markets, right? I mean, if I took my own preconception in and stuck with it, you're gonna have a hard time, and part of what we do as retail traders is trying to understand what professionals are doing, right? I mean, honestly, nobody cares what I buy. I'm not moving the markets with my purchases, right? And even my posts on Stocktwits, that's not going to move the market. Like people have been accused of that.
You
I
may
can
both.
tell you, nobody in the professional community is basing their decisions on what Don Corleone posts on Stocktwits.
If they are, can they hide?
Or what Nick's posting. Nick's got 13 million followers.
Right.
I think you kind of underestimate the power that you have, though.
I think the professionals, maybe if I share news that's unbiased, that can be influential, I think. But whether I think something's going to go up or down, I don't think it's going to drive the markets. But I share what, and that's what I try to do. I try to share unbiased opinions. If I post about stocks, I started putting disclosures, just because I don't want people to think I'm trying to manipulate something. But I'm just again, the goal is to gain as much information as we possibly can. And even great companies can change, right? There have been great companies that have gone bankrupt that you would have never thought, right? Nobody would have ever thought Enron was going to go bankrupt when it was in its peak, right? So we just have to be aware. We can have our convictions, and the amount of information we have to make that decision will help us in how convicted we'll be, how much conviction we'll hold. But we still always have to be flexible because there's no guarantees in the market.
That was exactly the way I was approaching the past 4 months, Chris. Was if I'm wrong, I'll buy higher and sell higher after that, right? And this wouldn't be the first time I was ever wrong, so I can't take it to heart that if I don't think the market's going up from here, the best thing to do is sell. Nick, you've been bullish. You're still bullish, right?
Oh yeah.
What's out there that you see other than the president just saying that kids are going to have a shortage of toys for Christmas a few minutes ago?
I
Is that what he
think
just said? Oh,
Yeah.
the intersection of just where we're at. I think AI, crypto, I think the lack of there's so much change happening that I can't help but be optimistic and entirely. I I live in my trail stops, and I'm a technical guy, so I know for certain I'm never going to sell the top. I'm never going to. Yeah, there may be instances where I do sell in the spring, but more than likely, the bulk of my position is going to be on the break of a 20-day or break earning day, and like my P&L would not be moving in the direction that it is if I was arbitrarily just selling positions. I would be getting ping ponged all across the place based on what this person's saying, what this person's saying, what this, you know what I'm saying? Like, it's kept me in trades way longer than I certainly would if I would have decided to sell based on this or based on that. It just takes a lot of the guesswork and emotion out of it for me. I'm typically determining prior to getting into trade whether or not I am where I'm setting my trail stops. Obviously, it depends on if trade starts to work versus if it rolls over and stops me out. So
Hey, Nick, one name that just came across as trending on Stocktwits. If you click that little blue flame on Stocktwits' page, it'll tell you why it's trending. But Palantir is near all-time highs again. I know this was a name that you have liked in the past. Right now, I guess optimism is surging over the upcoming earnings. Do you think this should be trading at all-time highs right now?
I mean, the market does. I can't argue with it. I know everyone has their opinions.
I'd like to hear GP's opinion because he says markets can misprice sometimes, right?
Yeah.
What do you think?
So, like, this is one of our first podcasts was probably 2-3 weeks before 2022 happened and all of the meltdowns and stuff like that. And Nick and I had a conversation about Lamb Research. And remember that conversation? It was no, but it was a very good indication of what was going on technically. That if you had been paying attention, what was going on technically, then it would have kept you on the right side. Which is Lamb Research at the time had this monster week, right? Like this impressively amazing week at the beginning of January, in the middle of the things just starting to break down. And my simple question to Nick was, why was it so impressive yet could not take out all-time highs? So that's what Palantir reminds me of here in this conversation, is that Palantir is still not at all-time highs, right? Like it's pushing, it's strong, but it hasn't taken out all-time highs. So what's you for you to have the breakout and a move higher, you have to have additional buyers and liquidity, right, to take it higher. So if you
Hey, Nick, you can jump on Lamb Research right here at the same price that it was.
but that's the bar, right? You see that bar, and it didn't take out all-time highs. And Palantir kind of reminds me. Obviously, valuation is crazy. It's a culty stock, as some people like to call it, or whatever. But if you go to the Palantir chart, Ben, you could have been involved in this cult as much as everyone else, because the chart was telling you in the mid 20s that this thing was going to rip, right? And so if you go to the monthly time frame on Palantir, it was accumulation bar after accumulation bar after accumulation bar. You can see it before the rip happened, right? And so, like, you missed it. Fine, not every stock everyone wants to invest in, but to come out and call it culty means you just missed it. You're just a sore person, in my opinion. But we were talking about Palantir in, like, I think 21, 22 against that 2160 level, if I remember correctly. It was I think it hit like 2180 or 90, and we're like, this is one of the greatest risk to reward scenarios. And if you had done what Nick normally does, which is just a trailing stop, you're still not out of the stock, right?
Yeah.
You're still just riding it all the way through, regardless of what it does here. But that's the combining the technicals and the fundamentals in this conversation are always really, really powerful, in my opinion. And so I will ask you the question on Palantir is, why hasn't it taken out all-time highs yet? Look at Netflix already has, Spot already has. Right? It can, but that's when I would feel more confident that Palantir is going to go higher.
I like the hot dog we have here on the volume profile.
By the way, this is my. I will admit, this is my first time with this podcast. I unfortunately hadn't had the opportunity to watch it previously, much to my loss. I wish I did, because I just want to say, when I listen to you guys talk, there are things that are just so encouraging to hear. You know, when you talk about P&Ls, right? When you talk about the discipline that you have in the way that you look at things, I just hope, as viewers, and myself being a potential viewer, these are the kind of things that we as retail traders really need to understand. Is we're not just randomly listening to somebody or whatever and then just going into a stock and holding it because somebody said it's a good stock. Like, learning how to look for these patterns, the indicators, the volume indications that you were talking about. These are just the the way we need to look at things, and it's just so encouraging to me that there are podcasts like this where people can come and learn how to look at things in a way that's going to improve their probabilities of success. So sorry, I just had to interject that. It's just so refreshing and encouraging.
We like to say we've been giving away free alpha since 2022.
Yeah, well, and it's amazing to me that this is all, a generation ago, you couldn't find this information. Like, you have to pay a lot for this kind of information.
You weren't allowed to, right?
Yeah,
It wasn't.
no.
It wasn't. It was. They talk about in the current administration now, which is Wall Street versus Main Street, right? For years, Wall Street held the power, right, of the information. They still do. I'm not under any impression that we have anything more privileged, but the only thing we do have is the things that are in front of us, right?
Yeah.
And life
They're
in
nimble.
general, stock markets, whatever, leave a footprint of the behavior they have shown over a lifetime, right? So this, I quite often we used to talk about this a lot more, which is the human psychology of what charts show. It's showing your emotional fortitude. It's showing your resilience. It's showing all that stuff. Well, who's panic buying, who's panic selling, and stuff like that. It's all visible on a chart. You don't need any indicators. You don't need anything else. You can see that. I think before we got on the podcast, we were talking about, I believe, supply and demand drives the markets, not narratives, not fundamentals. Well, that's where we're different. But so people talk to me about narratives
Mhm.
or news or fundamentals. Yes, those things matter. A stock market that's sitting at 30, 32 times sales or sorry, PE is most likely not going to break out, right? You're going to have a liquidity driven event lower to grab more buyers to go higher. And so that could be Palantir, as we were just talking about, that it had that liquidity to move higher. And that's the stock market in general here, which is why I think the path is actually higher. This is the same retrace. Ben, we talked about this when we first started, which was it's a 50% retrace. We had a 50% retrace in 2022. We had a 50% retrace in 2018. These are typical that happen every 2 to 3 years, it seems these days. But it's I love this stuff because probability is how you can always keep yourself on the right side of the trade.
And I think that's an important thing we have to differentiate, right? We're looking for probabilities. We're looking to put probabilities in our favor, but we never have certainties, 100% certainties, right? Jesse Livermore said, it's one of my favorite quotes, right? Stock market is never obvious. It's designed to fool most of the people most of the time, right? So if it was just intuitive, if everything was intuitive and you just had to be smart, everybody be making millions of dollars, right? Everybody could do it. But true fact of the matter is everybody can't do it because the market it's a dynamic functioning mechanism. And you have to be this you have to be fluid and you have to be able to understand things could change, right? Um, the last 15 years, it's an interesting conversation I've had with people. If you're a portfolio manager and you're in your 20s, late 20s, early 30s, the concept of buying the dip has always worked, right? It's always worked.
You could say that if you're in your 70s and 80s too.
But you haven't been through long-term recession, right?
Correct.
Like I went through the recession in the early 90s. I sat through the dot-com bubble burst. I had friends. I have a friend who's a portfolio manager, and she was in all the top stocks at that time, that the equivalents of the Nvidias today, right? She was in at the time it was Yahoo, it was different companies, but she was in all the best companies and she was technology focused. And her portfolio over that period dropped 90%, right? And and if some of those companies went out of business, right? Everybody talks about the Amazons, right? This is the next Amazon. But what about the Netscapes? Or what about all these other companies that don't exist anymore, right? So you got to recognize that there are dynamics at play and things can change, right? And I think the last 15 years, the reason we haven't had the typical recession cycle that we can find historically, recession cycles typically are about every 8 to 10 years. The way we have avoided it, to be very candid, is we've printed money. You know, that's what we did. We call it quantitative easing, is what we call it, but we're printing money. And why do we do it? Honestly, I think because we can. We have enough. You know, I was on a podcast a couple of weeks ago, and I found it fascinating that the word fiat. Do you know what the word actually literally means? Fiat. Most people don't. I didn't know, and the word means force. And what it basically, the concept is, we used to have money that was backed by something,
Gold.
right? So it was backed by in our case, the gold standard, right? Uh, the pound sterling was a pound of sterling silver. That's what it represented. And when we came off the gold standard, there's nothing, it's not tied to anything. So when you invest in it, basically you're trusting the force of the entity that you're buying the debt from, right? That they'll somehow be able to repay you, right? And so in the last 15 years, every time we've gone through a period that typically could have, I think we might have experienced a recession, we we printed money. We printed money our way out of it. And it's worked, right? So that's a recognition, right? If you looked at historical cycles, you might have missed that, right? And you had to recognize, oh, okay, we're able to print money now. And so
One other thing that I think also happens, Chris, is going back to the .com bubble and even 2022, right? The market was down quite a bit, but we didn't have these intermediate flash crashes. And I think the cycles of the market have gotten smaller, right? And the flash crashes, whether it's down 7-8% in a week like we've recently experienced, I think those are things that keep the porridge just right, so to speak, right? Instead of having the long, drawn out cycles of the business cycle being down, we all of a sudden have a flash instant within, whether it's the yin carry trade or whether it's COVID, right? I think there's these instances in the market that just all of a sudden just bottom everyone out. They take everything momentum, they take everyone's perspective of being bullish, and they just turn it on its head. And then that's what the market needs to build back up. I think that was what GP was sort of referencing, the wall of worry, right? Because everybody's so scared to buy, and then all of a sudden institutions and retail comes in and it starts building back. I don't necessarily expect this to be a V recovery from what's happened the first couple months of this year, but it could be. I'm open to that scenario.
We already beat out.
What's that, Nick?
We already beat out.
How have we beat out?
If you pull up the queues,
we're out?
Be out right now.
Well, I think we're on the way. This is what we've talked about. If it holds this, there's that 472 number that I lovingly put up there. We haven't held that yet. So how can we say that we're out?
I mean, I would just argue that we're flirting with the confirmation right now. From a technical perspective, we have a massive piercing candle back to back with a massive engulfing candle. That looks like a big V to me. And then obviously the candle we're putting in right now, again, like I'm just putting with you. We V'd out and we're flirting with the confirmation right now. That's all.
It could potentially be a V. I don't think we have confirmed that it is a V, is my point.
No, we're
Sure.
15% below all-time highs, right? So you're still sitting 75 points below all-time highs. And
all I'm saying, Nick, is 472 is the agreed upon pivot of this show.
All right.
I think the V potential is there, is what I think we all are seeing
For sure
in front of us, right? And
I've said over the past few weeks I'm less bearish, right? I'm not a doomer, but at the same time, like, I've already bought at a discount. I don't want to start throwing the rest of my dry powder at this level that we haven't proved that it's going to hold. Chris, one thing that you said a minute ago I thought was real, and GP, you kicked it around too. There wasn't this community previously during .com, right? And even before that, there wasn't a way for people to communicate, or even like my parents are boomers, right? And they never talked about finances between themselves or with any it was sort of taboo.
Yeah, 100%.
And I think right now is just a spotlight on how well people can do or could get hurt by just throwing money without doing some type of homework. Nick's famous for saying the work's never done. Chris, what type of work do you look at over the course of the week to sort of set up your strategy going ahead?
Yeah, like I said, for me, again, the mindset that I try to take in is, again, by looking at all of these variables within the market, the fundamentals, the technicals. I'm, like I said, that's why when I mentioned earlier, right now, I tend to be more nimble than I normally am, because that's what I'm taking away from the market. Things aren't necessarily, but again, I'm not saying it can't go higher. It certainly can. I just want to book my profits where I can take them at the moment. But that's me. I'm not saying that's right, but that works for me based on my trading style. And again, I'm older than probably most people listening to the show, so I'm I'm a little more risk averse than someone who's 23 years old, has a job, and is going to be working the rest of their life and can afford to go through a downturn, right?
Sure.
Uh, it's different. It's no one size fits all for everybody, and that's why it's so important to know yourself, know what's important to you, know what you're, where you could potentially be vulnerable. You know, like one vulnerability for me. I'm a very loyal person. I've been married over 30 years. I like something. I want to be loyal to something, and sometimes I stay loyal to stocks too long. Like that's a pattern I've recognized within myself. So all of these things, I like. You gotta obviously you have to look at charts. If you don't know charts, chart patterns, you got to know the charts, right? That's an absolute. But in this current environment, I do think um, the the geopolitical factors that are going on, you can't be oblivious to that. I think you got to have those things in mind. Um, and we're in a period right now where there is just a lot of uncertainty. Nobody knows. I hope Trump knows what he is doing. Uh, I don't know if the market doesn't feel they know. I think it's pulled back because they don't feel they know. That's my opinion. I could be wrong. Um, but if they felt confident, I don't think we would have seen the pullback we did. And I just think right now, due to that uncertainty, I'm kind of more, again, I'm looking at being more fluid, more nimble, taking my profits where I can, uh, limiting my downside risk. You know, people, do you hold into earnings on a company? You come out, earnings are bad. You wake up the next day and you're down 20% on a stock, right? That's hard to recover from. So again, if it depends on what your objective is, what your trading strategy is. I tend to be a little bit more on the conservative side, admittedly, and sometimes I'll miss big moves on the upside, but I'm okay with that. Like my number one priority at my stage in life is security and asset protection, capital protection. So I orient my strategy to do that, right? I was mostly my retirement accounts were all pretty much recently in money markets, so they didn't get touched by the downturn, right? But if it was a big move up, I would have missed it. But like I said, I'm okay with that. At the stage of my life I'm in, I'm okay with that. You know,
Chris, I wish you had been on with us years ago. You would have heard from the great American poet, laureate, author G. Piza when he said about loving stocks, "We don't love these hoes."
100%. Do not love these hoes.
I think I heard that on I think that's gone viral, hasn't it? I'm pretty sure.
Yeah, for sure.
I think you can love certain stocks, right?
Your
but-
conviction could be higher, certainly
Yes.
on certain stocks. Yes.
And so if the narrative changes, that's when your love should turn to hate, right? Like that's like it's if we would talk about marriage as an analog to this, right?
Yeah.
If you've been in a loving marriage for 30 years and then your spouse cheats, husband or wife, doesn't matter. Something's changed. So whether you want to still be in that and make it work is a different conversation. The problem with the stock is you're not involved in the public's on the private side of things, so you have to make a judgment call. But it's very similar in this case. Like a great example of where I first started investing was a stock called BlackBerry, right? Research in Motion.
Mm-hmm.
I bought it, it tripled, split, and then went up again. I was the most ecstatic. I just graduated college. I had absolutely $0 to my name except for Research in Motion, and now I'm sitting on a lot more money than I had. And then I saw it evaporate, and you're like,
Yeah.
What do you do? And something had fundamentally shifted, they said they can kill the iPhone, and they've been lying to us since, right? Like it's exactly what it is. So you gotta also be really, when you're looking at charts, you also gotta see what companies are doing, and I think it's a really good part of the conversation. But I also want to take some time. Do we have any charts? I know we people want to talk about stocks in our podcast as
Yeah,
well.
hey.
So I think we have about 5 minutes left. So if we want to,
I'm just
any of them.
thrilled to be here listening to
Yeah.
you guys, to be honest with you. So whatever
Let's pull up a name.
Yeah, I don't have.
Actually, I'm doing that, Jimmy. Hey, Chris, we're familiar in things that we trade or we own, and usually at the end of the show we do like one name you're looking at, one name you like, not to necessarily sway someone, or if you're long, great, go for it.
Yeah, maybe you could look at the chart. I'd like to get your impression of the chart on this stuff.
Sure.
It's a Canadian company. It's held up well through the downturn. I think they have a lot of things going for it. You can research the company. Symbol is GFL.
GFL.
I think it stands for Green for Life. It's not in a sexy industry. It's in.
I love it already. When I see up and to the right, Chris.
Yeah, I've been in this one for a little while, and I'm patiently. It's approaching. I think it's hitting all-time highs now.
Yep.
And I think they come out with earnings after the close today, which is, again, another question, right? Do you hold the stock into earnings, right? But and that's where, again, I wrote a piece on a post on Stocktwits about how to look at analysts' opinions. And I encourage anybody, if you get a chance, please read that. Their opinions, like everybody else's opinion, right? But these are people that are paid, right? That this is their profession. Their job is to research these companies. And the opinions I've read, and I don't take one opinion or one, but I look across all of them, and I'm seeing favorable opinions about this company throughout, all the different analysts. I like what they're doing. They're buying back stock. It just seems like a lot going for it. Again, I'm not saying it's going to move higher. There's no guarantees, right?
You're not gonna like what I have to say. So
okay, well that's good. That's good. That's what I want to hear.
We'll start with that. What do you think?
What's that, GP?
I said, what do you think of the chart?
I think it's looking like a little bit of distribution.
Bingo. So to me, the two red flags for me is it's an IPO. It's less than 5 years old. It has
GP hates anything that's recent.
Okay.
Yep.
Okay.
This is just me, and so the way I see IPOs is it has that initial pop out of IPOs, and then comes back and retest base, and then builds higher. Right. There's very few names in the stock market that have gone just IPO straight up. Google's one of them. I think Workday is another one. There's a handful of companies that have done it. So that pattern has existed for me for a long time. And if you're a new IPO and you're buying back stock, that's a huge red flag for me. Because if you're going to the public market for growth, why are you buying back stock? Use that to grow, right? I had the same opinion on.
I think actually the company had an offer for the company, and they declined the offer because they wanted to continue to invest. They believed in the company and wanted to, and that's why I think the buyback is coming from. But again, I'm a little bit familiar with it, but I'm glad that, like I said, my opinions aren't always
No.
I was right.
That's why I said you probably won't like what I have to say because it's not based on charts. It's actually based on my red flag.
I like what you have to say because I like opinions that are different to mine. Because if I think I know it all and I got it right, and I'm not right, then the only way I'm going to know is if I hear an opinion different of mine. Absolutely. So I like what you have to say.
If I had been looking at this just straight off technicals, I would have been in this stock around above 44, right there. That's where I probably would have bought.
That's where I'm in. Yeah.
And if it comes down under like 47, I would probably let it test the weekly 20 and below that, I would be out. I would book my profits from 44 to 46 and a half, and I would see where it sets back up.
Mm-hmm.
Yeah.
I respect
That's just me.
Yeah.
No, that's a great opinion. Like I said, I want to hear your opinions. That's great. I think that's a
You said
good
it. So because of all our wash sale rules,
Mhm.
I would set a stop right above where you bought, so you're always green.
Always green.
So even
Yeah.
if it goes,
Then you can buy it
you
back
can buy
without the
it back
washer.
without having the wash rules. So that's the way. Like you're in from a good price. If it doesn't have if it's a failure to break out,
Break out, then you
then you're still you get a small green
take your
trade.
profit.
Yeah.
And then you can always re-enter.
Yeah.
Yeah, I like that weekly 20. I marked this line at 47, but I would I'm a big believer in undercut and go, right? So when I draw a line, sometimes I want to see that breached or at least tested.
Mm-hmm. Mm-hmm. I hope your audience.
Nick, what about you?
If I was tearing it apart, I'd start at the monthly. I see a range from 45 to 25. I'd extend that 20 points out. So I'd have a measured move at about 65-ish. Same with you. I would have been probably looking to enter around that 44 area. I can't say I would have been able to hold through that washout here in April, but I would have been looking to get to re-enter based on that 3-week fight at highs. And then from there, I would be picking entries off the daily until that 65 gets hit. In the back of my mind, I'm thinking like, okay, we have a stock that's trading between 65 and 80. We've got the 100 round number that's probably going to act as a magnet. I'd just be trailing after that.
Ben, can you pull up the quarterly as well?
You got it.
Thanks.
So GP, looking at the monthly, I don't know that it's distribution. The weekly looks a little distribution to me, especially looking at the volume. But I do like those 3 higher buy volume bars.
But the daily looks like distribution.
Yeah, the daily does. The smaller time frame does, but the monthly doesn't. But as we've talked about before, the smaller time frames can lead to change in bigger time frame, right?
Spinning top, right? Like to me, this is a quarterly potential. I'm not saying it is. You could potentially have a spinning top here, right? So which is like it has buyers, but not enough to get it higher. So and if it normally you don't see a hammer in the top part of the cycles. Hammers in top part of cycles are not the greatest of looks, right? So could they still break higher? They can, but it's just not what like you see like the hammers that happened at the bottom of the ranges with the wicks. They're happening at the bottom of the ranges so they can push higher. So you don't want to technically see that. And a lot of people will look at that and be like, hey, this could be a spinning top. I'm not worried about spinning tops and stuff, but I just don't like that it doesn't have a huge base then, right? Like I would have loved to see a big base. Like if we're talking about Roblox as an example, it's got a monster base that when it launches, it has the buyers to sustain much higher.
Mm-hmm. Mm-hmm.
So that I don't invest in IPOs. Anything that's less than 5 years old, I found over time just irritates me over time.
You brought your wet blanket with you to the city today, GP?
Yes, it's really hot outside, so I got to keep the wet blanket.
But this is exactly what we're talking about. You know, if you go in with a preconceived narrative and you're in love with a stock, you're not going to be open to hearing opinions different to your own, right? And that's value. What you guys shared is valuable information. Where you mentioned, and this is strategically where I am too. Yeah. If it starts to show that weakness, to book the profit and wait on it. It's okay to do that, right? And
there's a new train every 5 minutes.
Yeah, and I've been fortunate enough to get in at the right time, so I could do that, right? And every scenario, you have to look at all the variables that are there and make the best calculated decision you can. Can they blow out earnings and the thing run higher? Yes, and that's great. But I have to strategically have a plan so that if that doesn't happen, what am I doing? And you can't just have no plan, right? And so I hope
Bingo.
I think your listeners, the value of what you're really giving them is an understanding of how to look at things in a professional way, right? How to manage your trades in a professional way. That's what professionals do, right? As retail traders, we want to learn how to do that better. And there are models of people who do this. And what you're sharing is so valuable. I just hope you listen.
Just having you on the show today, Chris, was such great insight. We greatly appreciate it. Unfortunately, we're at time. But hey, congratulations to both of you at the Cashtag Awards. We can't wait to see how the night wraps up there in New York City. But hey, if you're not following Chris and you're watching the show, give him a follow. Don Corleone 77 on Stocktwits. Of course, GP and Nick over here. You've got their tags.
And if
But
any of my followers
hey,
are watching, if you guys don't follow these guys, make sure you do. Okay, follow them.
Thank you.
thank you for that, Chris. We appreciate that, and we'd love to have you on again at some other time if our schedules permit. But hey, thanks everyone again for watching the Stocktwits Community Rip Live. Those guys are live from the Cashtag Awards. We'll see you again next Wednesday at 2 p.m. Eastern Time.
Thank you. Thank you, guys.